Hi guys, another tutorial in English is the same that I do in Spanish. I think I'm going to do that every time, make the tutorial in both language. And okay, in this case I want to talk about swing trading. I know some of you, or maybe the majority, are day traders, and that's okay. I'm day trader actually, but I start on the swing trading side, so I want to show you which patterns and which tools you need to understand how to play in a swing trading. So first of all, I want to explain what is a swing trader. Okay, it's a style of trading and is different from the day trading. In day trading, you may know that you close a position on the same position. Okay, so in the swing trading, at least you have to open. For example, I open today a position, and for tomorrow I close the position. So you left your shares overnight, and that's a swing trade. Okay, and maybe there are people that trade they left their positions like a month or 2 months or 6 months or a year, really long term. But in this case, I want to talk about the swing trading in the short term. Okay, left the position like maybe 1 week, 2 weeks, at least, maybe a month, but not anymore. So I hope you understand this type of trading. So let's start with the tools. Okay, the principal things that you need to understand is that the day trade in swing trading, the daily chart is the principal tool to watch the patterns, to watch the price action in the long term, as you can see on this stock. And so it's the principal chart that we need to use. Okay, so the second chart that you will use is the hourly chart, the 1 hour chart. Why? Because this is really important to watch the intraday behavior of the stock and the last couple of days behavior. You want to see where is the I want to explain some of the pattern, but it's after this. Okay, so you need to watch the highs on the previous days and the price action intraday. So the hourly chart is really important to follow your position in a short term. Okay, but the daily is what we need to look for, decide if the price, if the pattern is great or not. Okay, so these two charts we will use, and the next thing that you need is a screener. Okay, so the better part on swing trading is that you only need the level 1 data. Okay, you don't need the level 2, the time and sales, all the market depth, because you are trading like with more patience, with more time. So the only thing that you need is a scanner that give you all the charts, talking in a long term or medium term. In other words, the daily chart with a great patterns. And in swing trading, I'm more long bias, so I only trade long, and you have a lot of free tools to do this. Okay, for example, Finbiz is free, this website, and have this as you can see on a screener. You can create your screener, and let me show you what I do. Okay, this is my screener to watch swing trades, and actually I look for stocks that have a price under $10. Why? Because a cheap stock is better to create a nice portfolio. Okay, to have the opportunity to be liquid, sometimes to watch stocks that are hot with a nice pattern, and maybe the entry in some of these stocks is on Monday, and other great pattern in maybe the next day, on Thursday, on Tuesday. So that's why you need to have liquidity on your portfolio. Okay, so it's really important under $10, also because they have great performance, great movements to the upside. Sometimes because they have momentum, low float, you understand that, okay? So, as you can see, I look, this is the key part, I look on the 50-day, last day, that we are close 0 to 3% below the high. So all these charts are really close to the 50-day high, but not above that high. So it's really important because you can anticipate the breakout. Okay, so the other thing that I look is an average volume of 100k. Actually, I will put average volume of 300k. We need liquid stocks, and of course in that day of the breakout we need a high relative volume. Okay, so let's see what happens. The next thing that you need is to watch the stocks. Okay, watch the patterns on all these charts, and as you can see, Finbiz give you their technical analysis, but sometimes it's not great. For example, these trend lines is not really telling you something, but you see the price action, you focus on the price, and watching that you may have some great opportunities. So what we look for, let me go back right here on my chart on TradingView. We look for great chart patterns in the long side. Okay, so which kind of patterns we look for, and let me show you all the examples that I have on my ideas posted on tradingview.com. As you can see, this is my my journal of swing trades, and let me show you why. For example, I have right here an idea of I put it great long pattern bigger than 0.77, so this is a penny stock. And as you can see, this is the kind of patterns that we look for. I don't care about the primary trend. This primary trend is bearish, and then we have a nice consolidation. But the key part is to watch a psychological level, and we have right here a really nice one. So we test once the 0.767, twice, and the third time right here. So I said on my comments, looks like is going to break at any time. Okay, so for me it's a long position if we break the 0.77. And what happened? Let's see. Look at this. Fucking awesome, fucking beautiful. 10 cents into the money on a penny stock. This is like 20 or 50%, and because it's a penny stock, you can buy a lot of shares. Okay, you can have 5,000 shares and really nice performance. 50% of that 5,000 shares. So it's great. As you can see on the charts, I use the simple moving average of 200 sessions, the 100 session, the 50 session simple moving average, and then these two reactive was the 8 exponential moving average and the 21 exponential moving average for follow the momentum. And the other 3 are for pivot points. Okay, let's see the next one, the next example. And all of these examples, Finbiz gave me the pattern, gave me the chart actually, the stock. Okay, so as you can see in this case, it's not a bearish trend, it's a bullish trend. Okay, so the stock test one time, twice, and the third time right now with an ascending trend line. So this is awesome. Remember, I always look for stocks that have a psychological horizontal level. In this case, we didn't trigger the price action. Yes, we have some prices above that horizontal line, but what I have to say in these cases, you need volume to confirm the breakout, and you want to close below that level, above that level, sorry. Okay, for a confirmation. In this case, won't happen, and we have a retracement right now. So sometimes you lose, sometimes you gain, and let me show you more examples. Okay, in this case, I said long position above 7.73, and as you can see we have the same exact pattern. We have 1, 2, 3 tests on that 7.73, as you can see, and for me it's a long if we break that. But as I said in this commentary below the chart, the only problem that I see on this is that the swing, just the last swing, is pretty overextended. So the stock could do a natural pullback and maybe support on the trend, on the line trend. Okay, so as you can see I put this line like a future behavior, and it never triggered. Okay, right now we don't have a lot of volatility. I am expecting the breakout of 7.73, but with a little retracement. Okay, so as you can see it's the same exact pattern, always. Let's see more charts, and maybe you get familiarized with this kind of stocks. As you can see, the primary trend in this one is bearish, and then we have a consolidation really nice and a psychological level 1, 2, and 3 times tested. What happens? It doesn't trigger. Okay, we don't have a nice breakout formation, we don't have nice volume, so you didn't trade this. Okay, I didn't trade this because they don't have a nice volume and nice price action. Okay, so sometimes happens. A lot of these trade ideas, swing trade ideas, never happen, never break that level that we want to see. So as you can see, we have right here MIFI, for example, and you have right here a really nice psychological level, tested once and really close right here, and right there really close also. So this is a psychological level of resistance, and we are above all the moving average. We have a really nice uptrend. So if this breaks pre-earnings, is going to be a killing. And what happens? Boom, we have a movement, okay, of maybe 10%. I don't remember the percentage, but was huge. Okay, so the risk benefit in these setups is great. Why? Because the target could be on 2.50 maybe, or 2.20 is the next target, and your stop is going to be on the next support that is below the breakout point. Okay, in this case the support was 1.69, so that's where your stop loss is going to be. Okay, so you know your stop loss, and the target maybe is not maybe you didn't know the exact target, but you will know that the target is going to be bigger than your stop loss, and that's why what you have to deal with every time on these swing trades, knowing where is your risk and knowing that your target is going to be easier. Okay, so let me show you an example of a losing trade. For example, LBIO. In my case, I said I want to enter long at 9.05. It's an incredible pattern of breakout, and what we see is a 1 test, 2 test, and 3 test. What we had yesterday is huge movement, and I go in at 9.10. So never pull my target was 10, and what happens is a fake out. So in this position you will lose money. Maybe your stop loss is going to be on this trend line, close to 8, if you are really if you manage your emotions well. In my case, I close this position and I am waiting for the better price. Okay, if I find some support, maybe I go in re-enter, but right now I don't want to see that. Okay, and let me close the examples with let me show you right here. It doesn't load, but let me show you a great example of a breakout. We have every day these kind of deals. Okay, so as you can see, we have a primary trend down, But my scanner in Finbis, as I said before, the most important criteria is that the price is close 3 to 0% to the high of the 50 days before. So right here we have a nice psychological level tested once, twice, 3 times, and then I said on my trade idea, I don't know why it doesn't show me, but I posted on TradingView, I would like to get long on this if we break the 2.10. And what happened is that a great freaking gap up. And as you can see, we have a gap right here. So this is awesome. We are breaking all the psychological levels, also the moving average, the 200 session simple moving average, and then we have a huge movement to the upside, almost to 210. Well, to the entry price, we have a 13%. It's huge. And then if my target was right here on the closing, the gap fill, 40 cents, almost 20%. This is fucking huge. And your stop loss is going to be just right here on the support below your entry. And as we have a huge gap up, your stop is going to be or maybe right here at 1.93, 92. Okay, so the risk benefit in this strategy is awesome. So okay, I want to explain another thing that is really important in swing trading, and the difference between day trading and swing trading is that you need to know better the stock, okay, the stock that you are traded, because something really important and is the short float. Okay, as I said on the tutorial of tape reading, the shares float is the total amount of shares that are available to trade from the public. You can, all of us, we can trade this amount of shares. Sorry. Okay, so the short float is the short interest shares. In other words, is the percentage of this amount of shares that are short by somebody. Okay, so knowing that, and as you can see, Finbis give you all the information of fundamentals and some technicals, and also the analyst recommendation, or I don't know how to say it in English, but as you can see, downgrades and the targets and neutral, and also news and social media like Twitter, like stock tweets. Finbis give you everything of the stock. So what I saying on the short interest, and let me show you an example on WTW. This stock, we have right here WTW. This stock at this time, they have a short interest of 30%. In other words, 1/3 of all the stocks in the available to the public was short positions. So why is important that on swing trading? Because we have the pattern, the same exact pattern as the other ones. Okay, a huge level of resistance, psychological level at 16.20, as you can see right here and right here, and we were close right there. But in this time, a lot of short sellers want to see this thing crashing down, and what happens? They win. A lot of shorts, and when we break that trend line, we have a huge aggressive movement to the downside, and that's because a lot of long bias traders have their stop loss on this support, and when the stop executed at market order is going to remove all the limit orders of buy and is going to go down really quick. And if the price go up and make this kind, let me show you. Imagine that the price make the pattern and we enter the pattern and break this right here and go up. All the short sellers that was right here, their entry point is going to be a killing, a short squeezy. Why? Because all the stop losses is going to be on that psychological, above that psychological level. So all the buying orders of the stop loss of the short orders, they will be consumed and moving the price up. A lot of demand moving the price up. So that's why the short interest in a swing trade is going to be really important, and you need to understand that. Okay. I think that's it for this tutorial. If you have some questions, I can answer. On my email is Antonio TRMX. Fuck off. Sorry for that. Antonio TRMX yahoo.com. Okay. Fuck off. So that's it for me. See you next time, guys.